we are co-hosting with GITEX at the world's largest crypto conference, the Blockchain Future Summit. At that conference, which starts on October 17th in Dubai, we are having a hackathon that leads up to the event, and we are going to fly in the top 5 projects in the top 5 tracks, in the 5 tracks that we have laid out. The only requirement for you to enter the hackathon is that you have to have an idea. We will lead you through the process. We will mentor you, we will host you, and make sure that you can bring your idea from idea to a fully fledged company walking out of GITEX, where we offer up to $1 million worth of prizes to the best 5 projects. All you have to do is apply to the hackathon. You can do that on our website, www.tde.fi/BizThon, BIZTHON. And you can be the participant and winner of this hackathon with your idea, build your own team, recommend people to go on your team, become part of the people that bring the ideas to our competition. And as such, even we've chosen to do something completely different this time. We are airdropping something special, namely a Lamborghini Huracan. The person that recommends and finds the winner for this hackathon will be the one walking away with a brand new Lamborghini Huracan. So don't delay it anymore. Go onto the website, sign up your team, sign up your idea, find the people that you want to win this if you know someone that can do it. And as such, I will move on to one of the topics of our hackathon, which is bringing business to life, understanding crypto. That we have the great pleasure of being joined today by Mr. Rohas Nagpal. He will tell us about how the development of crypto and cryptocurrencies and valuations happen. He's a renowned author and has brought his family into this, which meant that he had to write his second book for his children. And I'm sure he will give us the motivation for why he feels the next generation must know everything about crypto. Thank you so much. Hi, Rohas. You're still on mute. There we go.
Yeah, hi, how are you? I'll just share my screen. I hope my screen is visible to everyone. It would say, yeah, perfect. So we can keep this session interactive. I think the audience can put their questions into the chat. Is that available to them?
Yes, we have Q&A.
Awesome. So
I'll make sure to check if there's any questions.
Sure, perfect. So please keep sending your questions while I'm speaking. You don't have to wait till the end. We can take your questions as and when you have them. Now, the first thing that I'd like to tell you about the valuation method that I have pioneered is that I do it based on 5 parameters. One is the revenue of that particular crypto or the project. The second is the organization behind it. The third is the history of the project as well as the performance of its crypto on the markets. The fourth is the algorithm and the technology stack. And the fifth is the social parameters, where we analyze the social media presence and community of that crypto. Now, I believe these are the most important questions that we must ask before we invest in any crypto. Now, this is suitable for all sorts of cryptos other than stable coins, central bank digital currencies, and elastic supply or rebase tokens. So as you understand, a stable coin is supposed to maintain stability in its price by either being backed by a fiat currency or by any other asset. So naturally, that doesn't need valuation. Its value is always supposed to be equal to the asset that it is backing, that is backed by. Central bank digital currencies, again, are fiat currencies in an electronic form, so there's no concept of valuing them. And elastic supply or rebase tokens, as you know, they keep adjusting their supply to maintain a particular flat price. So again, that's something we can't analyze or value. But every other kind of crypto, you can use this methodology. Now, if you want to try this out, you could just create a free account at futuremoneywallet.com. And when you begin to evaluate, the first question you need to have is, are you doing it for a crypto which is being tracked by us or not being tracked? So these are the 32 that we track. So if you were doing one of these, you would just select it and click proceed. If it was any other crypto, you would enter its symbol here and the name here and then click on proceed. Fairly simple start. Now, the next step is to answer a series of questions based upon which a valuation is going to be generated. I'm a very strong believer in the fact that everybody must do their own research. So this valuator is not replacing your research. It is allowing you to use your research to come up with actionable insights on what the proper pricing is. But ultimately, you are the one who's going to fill this in. Of course, I also value cryptos regularly, so you can get guidance from what I've done, but I would always recommend to do your own research and then use the valuator. Any questions before we begin? Yeah, somebody's raised their hand. Mr. Khurana, you had a question?
Hello.
Yes, I can hear you. Please tell me.
Oh, yeah, sorry if I'm speaking this way. I'm at the accident, unfortunately. Anyways, so I lost you on when you were talking about the fiat currencies. Could you repeat that, please?
Sure. So this crypto valuator is not supposed to be used for stable coins as well as for central bank digital currencies, because those are simply electronic versions of fiat currencies. So that's the reason we don't value those, because they are supposed to be exactly equal to the fiat that they represent. That's what I was trying to say. Hope that's clear.
All right, fair enough. Thank you.
Sure. Okay.
Hello. Sorry. Just one more question.
Sure.
Could you just define fiat currency?
Sure. A fiat currency is the currency issued by a government. For example, the US dollar or the Indian rupee or the Japanese yen. That's what we mean by fiat. Hope that answers your question.
Yes, thank you.
Okay. Now, the first thing that we need to answer is, what is the likely economic impact of the crypto that we are talking about? See, a crypto is a financial asset. It has to perform some kind of a financial action or result in some kind of an economic impact. And that's the number one thing we need to figure out. So for example, if I was to talk about Bitcoin, there are two kinds of people in the world. Some who say Bitcoin is a medium of exchange, some who say it's a store of value. So according to what you think the crypto does, you are now going to ascertain what would be the economic impact that the crypto would have. So for example, there's a particular crypto called BAT, which says it is going to put an end to bot-enabled advertising fraud, which is expected to be $1 billion a year industry. So here we could straight away say, okay, if we were valuing that crypto, we would say the economic impact is $1 billion. If we're talking about Bitcoin and we believe it's going to be a store of value which would compete with gold, we would say then $11 trillion is the economic impact, because that's the market cap of gold today. So depending upon your reading of the crypto, first question is, what is the economic impact? Any questions? All clear? I'll wait for a few seconds. If there are no questions, I'll proceed. Okay. Now that we are valuing a crypto which is being tracked by us, the basic financial information is going to be pulled from our database. Otherwise, as you notice, from R1, we jump to R6, because 2, 3, 4, and 5 is going to be picked up from our database. Otherwise, you would enter the circulating value, maximum supply, total supply. Don't worry about that right now. The next thing we need to do is, what is the market share that this project is likely to capture? So suppose you think Bitcoin is one of the store of values which would one day replace gold. But Bitcoin is not going to do it alone. There could be other cryptos along with it which would create a new store of value. So out of that, what would be Bitcoin's percentage? Or a crypto which says, I'm going to do ad bot frauds protection, which is $1 billion industry. So suppose we feel that crypto which we are valuing will take 60% of that market. So we will enter that here, because the logical presumption is no crypto is going to take over 100% of any market. In every market, there are going to be competitors. So we need to enter the market share that we think this crypto will get. Any questions? Yeah, someone's raised their hand. Please tell me. I think that's Mr. Khurana. Yeah, please ask.
Hello.
Yep.
Yeah. So I just wanted to ask that. So how do you come up with these numbers?
Sure. So this is where your research comes into the picture. The purpose of this valuator is to take your research and make actionable insights out of it. So you've got to figure out. So for example, when I do this, what I do is I look at the vertical that it is operating in. Then I analyze which are the other cryptos in that vertical. And then based upon various factors, I try to figure out which crypto is likely to capture how much % of the market. And that's a very subjective call. Depending upon my read of the market, I would come out with my figures. Depending upon your read, you would come out with yours. That's the way the process works. Because it's not like the stock markets where we have decades of data available, which makes our job easier. So for example, in the stock market, it's very easy to get hold of earning per share and price to earning ratio. And based on that, we can do very quick predictions. A concept like that doesn't exist in the crypto markets, and which is the reason we have to take a very subjective approach. A mathematical approach is a little difficult. We need to marry the two concepts. Hope that answers your question.
Yes, just one more question. Are there any ratios to fundamentally analyze crypto?
Excellent question. And there are. So there are a lot of ratios like this, which after I finish this method, I'm going to talk to you about those other ratios also. Yeah.
Fair enough. Thank you.
Sure. The next thing we look at is the public information. So we issue a grade on a scale of 1 to 10. So we're going to check that grade here of the publicly available project information. So this crypto, we look at its white paper. We look at its explainer videos, websites, social media posts, infographics, the FAQs that they put up. We look at all this information and then try to see how good or bad is that information. What is the quality? Where a 10 would represent excellent quality and a 1 would represent really bad quality. What are the reliable website sources from where we can study about the project? Sure. So I would always recommend when it comes to the public information, first step, we look at the website of that project, the official website. That's where we get the white papers and so much more information. So I would strongly recommend for answering this question, go only to their official website.
There are resources out there, of course, that you can use.
Absolutely. I'm going to talk about
general information, but if you want to look at something specific for a company, go to their website, see how good it looks. What is the feel? Is it a disparate website where things are scattered all over the place, or is there cohesion? That gives you a lot of impression on how the company works, how their structure is, and how the company can move, how you feel the company can execute this that they're trying to do.
Excellent. Very well said. If there are no questions, I'll move to the next one. The next is the team. So now we're going to figure out what is the team strength. Founders, developers, marketers, the business team. On a scale of 1 to 10, we are looking how highly skilled, respected, do they have strong prior experience in the relevant field, strong credibility and positive social media status. The number one place to do this is LinkedIn. So go to their website, get the list of their officials. Then go to LinkedIn, enter the company's name, and you will see all their employees, and you know their names anyway now. Look at each and every one of them. See the kind of posts they put, the number of followers they have. How do people react to the posts put by them? Look at their backgrounds, where all they work, what projects they've done on. And LinkedIn usually gives you all the answers for the team. So for example, one of my favorite coins is called BAT, B-A-T, which is Basic Attention Token. And one of the things that impressed me most about the project was its founder was the person who invented JavaScript in the world, who also invented Mozilla Firefox. So obviously, when I read that, I know the team is going to be awesome because they've got people of that level. So team becomes a very important factor. Any questions? Okay. Let's move on. The next thing we look at is the ecosystem. So here now, understand that the ecosystem means the miners, the node operators, the partners, even the startups which are building on that platform. How vibrant is that network? So if it's a very centralized network of very few miners, of very few validators, that's a big red flag. If there are very few startups building on it, another very big red flag. See, don't go with what the company says. Look for proof. Suppose their website gives you a list of 10 startups building. Now go to the website of the startups and see, are they actually building something sensible? Because I come across so many startups which are actually building really ridiculous products which don't make any sense. But on paper, they're just trying to show more and more startups building, but there's no reality behind it. Be very careful with this. Start with their website and their social media, find out the startups, and then go to each and every website of the startup to confirm, are they actually building a strong product on that crypto or that platform? Any questions? Okay. The next we look at is their milestones. So in the past, how successfully has the project completed the milestones that they've promised to do? And here you'll realize some of the top cryptos fare quite badly on this. So that's a big red flag. In the past, how well have they been doing it? Again, we grade it on 1 to 10. Then comes a very important factor, which is the performance history and liquidity. So performance history means, so let's look at things like transaction volume. Let's look at active users, trading volume, adequate liquidity, availability of multiple trading pairs, listing on multiple credible exchanges. Now, this kind of data is a little difficult to get, but it's not impossible. So I would recommend you use CoinMarketCap. That's a good site to get this. And another one is Messari, which has excellent information available on every possible crypto, including, on a daily basis, how their trading volume is moving, how their liquidity is moving. All these factors, you will be able to get complete detailed statistics there. Any questions on any of these points? Are all of them clear to you?
Yes.
Okay, excellent. I will share the name of the website, sure. Messari.io. Let me just open that up here also. Maybe I'll be able to show you.
Oh, thank you.
Can you? I'm hoping, yeah. Are you able to see it on your screen? Messari?
Yes.
Yeah.
Yes.
So lovely website with very detailed information. So for example, if I was to go into a particular crypto, so I'll be able to see a lot of charts, but then here, this is where the real magic is. Profile, markets, metrics, historical data, charts, research, all this information, you can click on it and you can get all the information that you need. I would strongly recommend that you try this site out. It's again free. Anyone can just go and use it. Any questions?
Cool.
Okay. Then we go to the consensus mechanism. So we are looking for a consensus mechanism that is proven, secure, efficient, and with a minimum environmental impact. Unfortunately, you will not find anything which meets all. See, today the most tested is proof of work. It's proven, it's secure, and it's efficient, but it has a really heavy environmental impact, consumes a huge amount of electricity. Other than that, there are about 80 different consensus mechanisms: proof of stake, proof of history, proof of elapsed time. It's a huge long list. They may be better on the environmental part, but they're not proven. They're too new. We don't know how they're going to fare when millions of hackers try attacking them over a period of time. So it's a sort of a balanced approach. And again, on a scale of 1 to 10, we grade the consensus mechanism. Any questions? Okay. Then we go to the source code. So obviously source code is critical, and for almost every project, the source code is open source. So now here we look at the quality of the source code, and some of the factors to consider is third-party audits, critical, because if they've not done that, you can't really trust how secure it is. Pull requests, the issues that are being faced and how fast they're being resolved, the stars that different developers have given the source code repository, the quality and quantity of commits, the forks which have taken place, documentation. If you don't understand all this, get a tech guy to do this for you. You need someone with a developer background to do this. Someone's asked a question, is Messari a crypto exchange or it's like CoinMarketCap? It's like CoinMarketCap. It's not a crypto exchange. It gives you data only. So that's the part about source code. Then we look at the developer pool. So last two things. Developer pool is we look at the developers and the long-term availability of developer talent. So for that, we need to see what is the complexity of coding skills required. What is the current availability of talent and availability of good learning resources, and how easy is it for developers to get this skill? If it is very complex, not too many people are going to bother to learn them. So that's a big red flag. So these are the factors we consider, because in the long run, if we don't have adequate developer pool, that project is going to fail because you're not going to find people building on it. And finally, we look at the community and social engagement. So we want a crypto whose community is large, vibrant, active, engaged, positive, and a fair share of fanatics. Obviously, we need that also. And classic examples would be a Bitcoin or a Dogecoin. Fanatics. And that's what really picks up the value. Yeah. Any questions?
When you say large, I always worry about that because there are so many ways that people can gather a large contingency which is not dedicated to them, but only there in numbers. How do you distinguish between the two? Sorry.
Sure, it's a very subjective thing. So when I say large, I don't necessarily mean millions, because we've got to see what does this project do. So let's say it's a project which is about supply chain. So we know they're only catering to the B2B audience. So we don't expect 1 million followers. We expect a few thousand, but corporates. But if it is something like a medium of exchange crypto, like a Litecoin or a Bitcoin, guys, then we expect millions of people because it's a B2C. So depending upon B2C or B2B and what industry it's in, we would look at the numbers based on that. I hope that answers your question. Okay, awesome. Now, once we filled all this, we click on calculate value. And now something like this gets generated. I'll walk you through it. So because we were doing a crypto that is being tracked, it automatically picked up the circulating supply, total supply, and maximum supply. Circulating supply means the number of the coins which are in public hands. Total supply means the number which have been created minus the number which have been burnt or destroyed. A classic example would be Binance Coin, BNB. In their initial white paper, they said, we are issuing 200 million coins. Every quarter, we are going to burn or destroy some till we reach only 100 million. So in case of Binance, total supply is always going to be changing. But in case of something like Bitcoin, it's going to be the same because there's no concept of burning there. It's automatically algorithmically controlled. And finally, we have maximum supply. What is the max number of this crypto that can ever exist? And that's what in Bitcoin's case, we all know as 21 million. Yeah, I can see some of you have questions. Please ask. Yeah.
Am I audible?
Yes, you are.
Yes.
Yeah. So all these numbers that we were inputting, aren't they kind of relative? For example,
absolutely. That's why I said it's completely subjective. So what I'm doing in this method is using your research, your thought process, and then giving you a formula, which I'm going to explain now. But the inputs are subjective. I don't have a choice because that's the way the crypto markets are. They're very new. So we don't have long-term mathematical data like we have in the stock markets. Hope that answers your question.
That does. Thank you.
Sure. Most welcome. So now it says that it's given a value, a likely valuation of $3.48 for Cardano as on 26th of August when the circulating supply was this number. Yeah, someone has a question? Yeah, I think someone's raised their hand.
Yeah, hello.
Yeah.
Yeah, so could you read the, also I have two questions. Also, I have one question and one point to add. So first I'll ask the question. So could you repeat the consensus mechanism? I lost you on that.
Sure. So in consensus mechanism, we are looking for something which is efficient, proven, secure, and with a minimal environmental impact. And unfortunately, nothing fits in all because a proof of work may be very efficient, proven, and secure, but it's bad for the environment. A proof of stake may be good for the environment, but it's not really proven in the long run. So you give your own grading to it, and I'm going to show you how I've done that here. So now in case of ADA or Cardano, I gave it this economic value of about 369. Yeah, so this value I've given it about 100 billion. That's what I believe the market that is going to capture. And then in that market, I believe it's going to capture 80% of that, of $100 billion market. And I give it the category of a coin by the system automatically. It's considered a utility coin. So cryptos can be of different types. And depending upon the type of coin it is, a 1x, 2x, 3x, 4x is automatically generated by the system. And this is the rating that I've given it. So public information, a 7 out of 10. Team, 7. Ecosystem, 5. Milestone, 7. Performance history has been great, 9. Consensus mechanisms, really good, 9. Source code, dev pool's bad because I don't see that long-term developer pool building because a lot of special skill sets needed. And finally, community engagement. So when we do all this calculation, what this calculates for us is something called as the multiplier. So one is we calculate the base. Let me show you what the calculation is. So it goes like this. Economic impact multiplied by the market share, multiplied by the category that this crypto falls in. That gives us a base. All the subjective things that we put in divided by 90, because there were 9 of them, gives us the multiplier. Multiply the base and the multiplier, we get the projected market cap, and then divided by the circulating supply, and we get the projected value. And this is what it looks like. So the base here is 160 billion, multiplier 0.7. Projected market cap is here, and the final valuation comes to $3.48. So similarly, now we can do it for multiple. So I'm going to be regularly posting these for the 20 cryptos that I follow. And then you will be able to get a lot of the data. And then based on that, you can tweak it. So what I've done here, on the top here, I've also generated this kind of a graph. Now, everybody could have a different grading. So what we do here is, depending upon the grading, which is from 0.1 to 1.0, we are now predicting 3 different curves. If you are bullish, if you are neutral, or if you are bearish. And based on that, it generates 3 curves. And here on the side, you'll also be able to see, just a sec. It's not visible when I've expanded the screen. Yeah, here it is.
There we go.
So yeah, it gives you the projected valuations. So if you are bullish, neutral, or bearish, and depending upon the multiplier between 0.1 and 0, these are the different kinds of values. And the same thing here in a graph or a curve format. So this is the valuation, which is subjective in nature. Questions? And then I'll show you something which is more mathematical. Any questions on this? Is it all clear?
Yeah, it is clear on this, but I would like to just add the point wherein you said, the social reach of the coin, right? If it is large, go for that. Wouldn't there be a risk of, someone like an Elon Musk reading something and, if there's a following for the coin, so the coin, of course, the volatility is huge. So, yeah, would you consider that risk?
Sure, that's a very good point. So we need to understand that in which kind of cryptos do people like Elon Musk actually play a role? And you'll realize he plays a role in Bitcoin and in some of the meme coins like a Doge. But he doesn't really play a role in something like a BAT or a Theta, which is a more utility-based coin. So depending upon what kind of a coin you are analyzing, you could decide to give more or less value to the social parameter. But in my personal opinion, his opinion doesn't really count so much anymore. And the impact that he used to have is now actually diminishing because of the kind of tricks that he's pulled over the last few months. So I don't really consider his words so important anymore.
We had a comment in chat as well from Tane saying, since the valuation is a subjective game, why don't we include some parameters to capture emotional bias of the person valuing the project in the amazing model built by you?
Sure, that's an excellent idea, but my models are work in progress. So I appreciate your inputs, and over time, I'm going to build it better. So already what you're seeing is the third or the fourth iteration of my method. And I'm going to keep adding more to it. And yes, I hope to bring in these biases also. And in fact, I'm going to discuss some of them now when I talk about some of the mathematical models. So when
I have a little bit of a question for you.
Sure,
here.
sure.
This is amazing for assessment of an existing company. But how are we going to use this to look into the crystal ball and see where is this going? What's happening, and how do I find the next big project?
Sure, that's an excellent question. I haven't reached there yet. So right now I'm refining my model with the existing cryptos, and slowly I hope to now build a model for the upcoming ones where it may be just at the ICO stage. I'm working on that. I don't have it ready yet. Yeah, but I'll let you know as soon as it is.
Thank you. I'd like to know.
Sure. So now when we look at metrics which are mathematical based, one of the most important for me is crypto velocity. See, at the end of the day, it's a cryptocurrency. And what is the primary job of a currency? Is to change hands. So when we look at any economy, if the money doesn't change hands, the economy shrinks. So velocity of money is a conventional concept in economics. I'm applying the same thing to crypto, where I calculate the crypto velocity. So it shows up in these gauges here, and you can compare and you see that a Bitcoin has a velocity of over 1500, whereas something like Aave is only 22, and a Bitcoin Cash is still okay at 286. We should always look at this. So let me show you some more of them and how we really look at. So what the velocity is showing us is how fast is that crypto changing hands. And when I look at things like Theta, which otherwise are good projects, their velocity is near zero. That immediately gives me a red flag that the currency is not changing hands, which means even though the company may claim to have projects running, why is the crypto not changing hands? Why are people not buying and selling it? That means they are not actually using it as much as we would like to believe. So I believe this is, if you want the simplest method, just go with velocity. And anything which has bad velocity, stay away from it. Something which has good velocity, well, makes a lot of sense. And that proves to you why Bitcoin is what it is. Because its velocity is amazing. Ethereum's pretty okay, but Bitcoin is in a class of its own. And now what I've done is I've also made certain benchmarks. So I have made that the benchmark for a store of value crypto is 652. Medium of exchange is 111, and utility cryptos is 64. How did I get these numbers? So for store of values, I took the average velocity of Bitcoin based on data from 27th December 2013 to 27 July 2021. So I took this data for 8 years. Daily average calculation of velocity across these 8 years gives me this number of 652. For medium of exchange, I took Bitcoin Cash, and for utility, I took Ether. So Ether, of course, was invented later, so I had to take it from 7th August 2015 to 2021. And based on that, I've made the benchmarks, and then you can compare for all the different cryptos, what are their velocities. Any questions? And by the way, I forgot to mention the formula for velocity is 24-hour trading volume divided by the circulating supply.
How do you find those numbers? I mean, the circulating supply has always been difficult to assess.
No, not at all, not at all. These numbers are very easily visible. So let me give you an example. So I track 20 cryptos. So if I want to know for any of them, yeah. So here, I have the numbers available here. Is it, sorry.
Right.
Is it visible here? So these numbers are available in real time from their blockchain. So you can see the circulating supply, the total supply, all that's always available. So
you go straight to their blockchain?
Yeah, you can pull from there. So you can integrate. So I've integrated multiple API services. So I can get there in, so this data I update every 10 minutes. So circulating supply, total, max, volume, market cap, volume to market cap ratio, and velocity. Every 10 minutes, I'm updating.
Gotcha. Another question here. I guess the question is, how does proof of stake or proof of work get taken into consideration in the valuation?
Sure. So it depends again. So personally, if I was to give proof of work a 7, because it's really strong on efficiency, security, and proven, but bad on the, it's not so good on the environment. And then a proof of stake, I again give it a 7, because while it may be good on environment, it's not proven and secure. Again, that's a personal calculation. Because I'm a blockchain developer primarily, so for me, consensus is critical. So I've studied all 80 of the ones that exist today. And based on my knowledge, that's how I've graded them. Yeah.
Makes sense.
Okay. Now, let's look at some more numbers. So one is, of course, we saw, let me go to the top. So we saw velocity, which I say is critical. After that, we can also look at, we look at the market caps. So when we look at the crypto market caps, we realize Bitcoin is this major chunk. Ethereum is the next one. Then you have this tiny slice, which is Binance, and a tiny one, which is ADA, and everything else comes in that last patch. Now, if you believe in only looking at the large caps, then I would recommend that you stick to the top 4 or 5. Because as you can see, let's look at the total numbers. So as of right now, again, updated every 10 minutes, there are 6,552 active cryptos out of a total of 11,821 and 406 exchanges active. Now, when there are 6,500, and then I look at something like this, where the top 4 take over the major chunk, almost 70% is gone, and the rest of the 30% is on those 6,000. So then if I'm a very conservative investor, I'd probably only stick to the top. So I know so many people who never even go beyond the first 2. And that's again a very smart strategy. And if you look at the long run, that strategy has paid off the most. The maximum response has been to people who only stuck to the top 2 and maybe, okay, even the third one.
Yeah.
And if you're really, really adventurous, the 4th. After that, you don't even need to go beyond that. And then when you look at volume, the situation is even funnier. I would say the top 2 take over most of the volume and everybody else is now playing for a very small amount. So again, here proving maybe Bitcoin, Ethereum is probably the best and the simplest strategy. Just stick to the top 2.
So all of the work we just went through is superfluous because we should only trade the first 2 anyway.
So you know what? You need to see what kind of an investor are you?
Yeah.
What is your risk appetite? And what is your risk tolerance level?
So, but I'm honestly, your tool is magnificent for assessing a coin,
any
coin against. You're just doing it against these very big data sets. So I get it. But
there are a few more metrics. Thanks. I'm glad you liked it. The last metric I want to talk to you about is risk metrics. Very, very important. People keep saying that, okay, Bitcoin's volatile. What are the real numbers? So here what we do is we measure volatility. I've explained what it means. So volatility measures the price fluctuations of a crypto. So if a crypto has a higher volatility, its value can be spread over a larger range. And its value can massively change in a short period. Conversely, if it's a lower volatility, then it's more stable and smaller swings. And we calculate volatility using the variance and standard deviation. And this is what, so the 4 that I follow for volatility, when I look at Bitcoin, this is the one. You see this green one, the blue one here?
Mm-hmm.
Yeah, that's Bitcoin, Ethereum, USDT, and XRP. This is how we measure volatility. And then we look at something called Sharpe ratio, which is the average return earned in excess of the risk-free rate of return. So suppose we were to compare in the world today, the only financial instrument which is considered to have zero risk is a treasury bond because it's issued by the government. So that is considered zero risk. And now we compare a crypto with it and then we calculate its Sharpe ratios. So here again, Bitcoin, very close to Ether, very close to USDT, and XRP has a very sharp curve in there. So I wouldn't recommend novices to use this. If you are deep into the financial aspects, only then go into the risk metrics. So that's in this separate category. Otherwise, just ignore it. Otherwise, you could stick to velocity, market caps, volumes. And here, I've also given a lot of tables for real-time comparison. So those are basic metrics. Yeah. So here we can see all 20 of them. We can see them in one shot. I can just do the drop down of all of them. And here I can just click a button and immediately sort based on circulation supply, total supply, max, their price, their volumes, and their market caps. So based on that, you can immediately sort out and see which are the smallest to largest. I only follow these 20. I believe these are the only ones worth looking at. But of course, that's my personal call. Everyone could take a different outlook.
Quick question again here. Since we are considering future value to calculate the economic value of the market, ideally, we should also consider the percentual rate at which the respective currency market shares increases/decreases annually to arrive at a more realistic picture.
Sure, that's a good point to add in. Definitely, you could do that. So feel free to tweak this model and figure out your own. And then, of course, there are some people who think that if a crypto is low cost, so for example, an XLM at 0.33. So some people say, let me invest in low cost ones or a Tron, which is 0.11, because from 0.11, it can go to $1 and I'll make 10 times my money. Whereas a Bitcoin is already at $46,000. Is it going to double? But honestly, I think that's a slightly dangerous approach. And in fact, Warren Buffett has spoken a lot about not using this kind of an approach in the stock market. That don't buy a crypto just because the price looks cheap. Okay, don't buy a Chiliz just because it shows 0.34, or don't say no to a Bitcoin because it's 46,000. No, that's usually not a good idea. Don't buy just because it looks cheap. Look at more statistics, look at more fundamentals.
Yeah. And that brings me to another question. The crypto market has grown tremendously over the past 4 or 5 years. It's now valued in trillions. How is it affecting the traditional market, and how is it going to affect them in the long run?
Well, that's a tough question to answer, because what we've got to realize is people who are putting their money into crypto are not necessarily taking this money out of other asset classes. This is new money which is coming in big time. So when I look at the younger audience, every month they're earning money, saving part of it and putting it into the crypto market. So it may not even impact the other traditional markets. That's my belief.
Right. So you're still thinking that it's two completely separated economies.
I think there are two. That's the reason I've not been able to find much correlation between stock prices and crypto prices. I don't see them rising and falling in a similar way. In fact, let me show you some other metrics. Just give me 1 second.
And that brings me back to another question, because if you are a retail investor, how do you find the way in? I mean, to me, as a person in investor relations, I come across this question endlessly. When to enter the market, how to enter the market when you're a retail investor, what are the metrics? Because as you say, there are no correlations between how Bitcoin moves up and down and any stock in the stock market. So people have a natural, if they're a retail or a traditional investor, have a natural apprehension of entering into the market because they simply don't understand it.
Sure. Well, again, I'd like to quote Warren Buffett that you can't time the market, but I believe that the logic of buy the rumor, sell the fact, that works best for me. So when I first hear that a particular crypto is going to do something great, that's the time you buy it. But when it actually does that thing, the price is going to fall. And that's when you sell before the actual thing happens. Example, I think I at least, and a lot of people understood that Bitcoin being legal tender in El Salvador was great news when the news first came. But when Bitcoin actually became legal tender, that's the day it crashed. Did you notice that?
Yeah.
Yeah, that's the way it has to be. You buy the rumor. So the first time we heard a country is thinking of making it legal tender, but it hadn't happened, that's when you buy it. Then the market picks the price up, and all the retail guys come in who don't know the truth. They say, wow, it's going to be legal tender, and the price goes up. The day it became legal tender, so what? It's not like overnight they did $1 billion of trade. No, it's just people buying a few McDonald's burgers with it. So what's the big deal? And then it falls. So actually, these are very predictable. I hope that answers your question. Now, when I look into a crypto, this is what I do. So when we go, and somebody asked, which is this website? It's called Future Money Wallet. It's the website that I maintain. So let me just put the link here for you guys. It's a free website. Please feel free to open an account and start using it. So for each crypto, I look at firstly the velocity. So over the last 7 days, how has the velocity been moving? How have the prices been moving? How's the market cap moving? How's the volume moving? What's the return on investment? Now, this is something that I've mapped from the day one of the crypto. So from 2011 to 2020, annually, how has the return on investment been? Then I look at so many other graphs. So for example, I want to see how much does this crypto get impacted by social engagement. So I can see that here. So this here is the price, this is the volume, and this, what you see in blue, is the social engagement. And this is the market volume at the bottom. So we can measure based on so many things, like suppose Twitter volume. So I try to analyze which crypto reacts to what in stimulus. So, okay, Twitter volume to prices of Bitcoin. And we see, okay, sometimes it seems close, sometimes it doesn't. So no, may not be much. To volatility, to, let's say we go for Reddit volume. And now I begin to see, okay, you know what? Reddit volume is probably a better indicator of Bitcoin, except for this small period here. But otherwise, I would say personally, Reddit has the maximum influence on Bitcoin prices. So these are the kind of graphs. So there's a whole bunch of them here. Depending on whichever ones you feel like, for different ones, I would always recommend to try this out. So YouTube volume, I believe, has no impact on Bitcoin whatsoever. So I don't bother about it. But Reddit, yes, I believe it has a strong one. So you can try out all these different ones here. And that also gives you a good indication of what is impacting this crypto. Somebody says, yes, that's true. I have bought some.
Yeah, there's a couple of comments going on down here. You need to go a little bit back. He says, I know people who have made 100 to 120x by buying a shitcoin on BSC pad or ETH pad. Is this a bubble or am I missing something? And
if you call it a shitcoin, then naturally it's a bubble, right? Otherwise, why would you even call it a shitcoin? Exactly. So again, you got to see what it does. Like, for example, when we look at Dogecoin, I mean, it doesn't make sense to me why Dogecoin should actually have any value, because the number created every minute is humongous. But then again, in the past, it's gone up and people have made a huge amount of money. Well, that's a bubble you're playing. So as long as you're lucky, you're going to make a huge amount of money, but you don't know when it's going to crash. So we've got to keep that in our mind. Any questions? Okay, I have a 1 hour session since more or less I've covered what I wanted to show. Maybe we could spend a few more minutes on questions.
I've got a little follow-up question, actually. The NFT sector is pumping hard with projects like Ether Rock, sorry, and CryptoPunk sales, volume reaching millions of dollars. How should an investor find out what is the intrinsic values of the NFTs? How do you look at that?
Sure. So when I look at an NFT, it should have one of two choices. It should, one, either have an intellectual property license with it. So when I buy an NFT of something like a digital image, do I get the rights to commercially exploit it? So, you know, like I'm licensing a copyright, so it makes sense. But if you just give me a digital art and I can do nothing commercially with it, it has no value. So either it should have an intellectual property license attached to it, that's one, or it should be a digital collectible, like maybe a gun I can use in a game, or maybe a jacket that I can wear in a multiverse, or a plot of land inside the multiverse. So that's the way I look at it. If it doesn't give me an intellectual property license or a collectible in a multiverse, then it has no value for me. I don't recommend those.
All right.
Any other questions?
I think there's some going on in chat here.
Sure.
Can you please explain if STOs are better than cryptos?
Excellent question. I am a fan of STOs because those are security tokens and they represent ownership of a company. So in my mind, those are really awesome, because when you buy a crypto, you're not really getting equity ownership. So even though there are only 21 million Bitcoins, if you own 1 million of them, you can't say that you own 5% of Bitcoin. Not true. You only own 5% of a crypto, not the organization which owns that platform. And anyway, nobody really owns Bitcoin platform. But in an STO or a security token, you actually own an organization. And if that organization does well, you could make a huge amount of money, or you could just simply own it and generate revenues and dividends for yourself. So I'm a fan of STOs. But then unfortunately, there are not too many good STOs available. So conceptually, they're brilliant, but yeah, they're a little difficult to find.
Yeah. And can we get Harish in here?
Hello.
Yeah.
Hi.
Yeah. Can you hear me?
I can hear
Yes,
you.
we hear you perfectly.
Yeah. Yeah. My question was on the STO, and you answered it. Just to go further on this, are the regulations on the STOs much more stricter than on normal ICOs and cryptos?
Yes. The regulations on STOs are clear. Every country in the world has regulations around securities. So STOs are very easily regulated. ICOs is where the problem is, because different countries treat them very differently. So some ban them, some regulate them, some ignore them. But in STOs, it's very clear. Every country's laws are clear. So I would say, even though it's a little tougher, it's at least very clear. So
It is more secure for the investors.
Much more secure for the investors, because you have proper documents that are filed. Everything's very simple to understand.
And regulated. And I think it's like holding digital shares of a
You're
company and their assets.
That's exactly what it is.
Yeah,
That's exactly what it is. In
but
fact, there's also a concept of tokenized shares which has come up, where a custodian holds the shares. So for example, I track the top 10 cryptos, which is part of this year. So Amazon, Tesla, Microsoft, Google, Netflix, their shares are available on the blockchain. A custodian has bought the shares, kept it with them, and in return issues tokens on the blockchain, and you can buy them, and they represent the value of the share, exactly matching what is on the stock market. So that's another thing you could look at.
Are there any investment opportunities like mutual funds which invest in multiple cryptos, top 10, and which could be a new investment opportunity for new investors? Like they invest in stock through mutual funds, while since they don't have time to every day monitor it. So is there any such investment opportunity in cryptos where your fund manages or invest for you in the top 5, 10, and you get, if not exorbitant returns, much better than what you get in fiat?
Sure. So there are a few who have started. I think Grayscale has, and few others have. These are called ETFs. They're called exchange traded funds. Some have started. They're getting licensed in different countries, but it's a very preliminary level.
Okay.
Right. One benefit of going for a fund is that you don't have to keep your private keys. Because otherwise managing crypto is a huge headache.
It is really.
Yeah. So now in the US, many banks have started offering this facility to their customers, that the bank will hold the crypto for you. So yeah, that started. It's very nascent, but it has started.
And I have mentioned in my comment that I attend a few AMAs from a couple of top exchanges, and they hold it every week, and they say that millions of funds are moving from banks by ordinary people to cryptos for staking at 8 and 10% on fiat currencies. So I would say that is not new money, that is old money moving out of banks, because hardly you get anything on the fiat currencies by way of interest nowadays. There was a time I had kept on dollar annual interest we are getting at 18%. If I tell somebody today, they don't even believe it.
No, in fact, today you can still get that. USDT, which is the Tether.
Yes.
When you lend that, you can get 14 and 15% an annum. And then you add to it the fact that the dollar could strengthen against your local currency. You can still get that. So
no, but I'm talking about normal fixed deposits.
Yeah, normal fixed deposits.
On Indian rupees, 20%, 18%, and those days are gone,
Those days are gone. Those days are long gone.
Yeah.
You're right. So today in India, one good option is you could use USDT and lend that out, and you could make good amount of returns.
I read some negative reports about USDT, I think about a week, 10 days back, Is there an issue with USDT that they are facing?
That's a very good question, and that's something that's been happening for quite some time now. We regularly hear negative news about USDT because, well, what they do is a little shady. I'll be very honest.
Okay.
Initially, what they said was all the 100% of bank deposits that we get for US dollars, we are going to keep it in the bank. But then they started to invest that. Now the problem is they've started to invest that in commercial paper. That's corporate debt, which comes with a large element of risk.
Yes.
So now imagine if 50 to 60% of the dollars which are backing USDT are in a corporate instrument. And if that company collapses, well, USDT could go bust. And that's the reason a lot of people have now started shifting to other stable coins like USDC. But well, USDT still remains the largest despite all these fears. And they are publishing their proof of reserve regularly. So far, everyone's just going along.
But if that was not part of their original mandate that they gave to investors, then they are going out of the way, doing something.
Here what happens is it's not a long-term investment.
Okay.
What USDT says is every time you want USDT, give me dollars, I'll give you USDT. When you return it, I'll burn. So nobody is expected to hold it from the day of the white paper. That's true for other cryptos. But in USDT's case, it is supposed to be rolling money. So if you don't like it, please encash, take your dollars and go back. Because they never said the value would go more than $1. They said it will always be $1 and we will maintain a 1-to-1 peg. So if you don't like what we are doing, take your dollars and leave. So there's nothing wrong they're doing. They've changed their mind because they need to make profits, right? But what scares me is commercial paper comes with a lot of risk.
But tell me, how come, on fiat currencies like dollar and euro and even on USDT, they are able to offer between 8 and 12% per annum?
They are not giving it. The borrowers are giving it because actually, you know what? Somebody's mentioned that my 45 minutes were given. I've already gone to an hour. So anyway, don't worry. I give an Ask Me Anything session on Instagram every Saturday. So you could just follow me at Rohas Nagpal, and on Instagram, we'll take the discussion forward.
Instagram. I am not on Instagram, sorry.
Oh, you could just download the app. It's a lovely thing.
Okay. It's a very easy app.
Thanks.
Guys, thank you so much, Harish. Excellent questions. And Rohas, thank you so much for participating today. This went a little bit over.
I just want to mention, I attended first time and I'm really, so impressed. It's too technical for me, but I mean, the kind of knowledge that Rohan has is amazing,
Thank you so much. By the way, it's Rohas, R-O-H-A-S.
Okay.
So I've just put the name there. You can connect on Instagram and let's speak next Saturday.
Yeah, surely. Thank you.
Take care.
Again,
take care.
Rohas, thank you so much. We've covered a lot of ground today. Let's cut it here and say thank you to all the participants with the good questions, both in text and live.
Sure. Bye-bye.
Thank you.